Okay, let's talk about treasury stock. So this is when a company buys back their own shares of stock that are floating around out in the public. And so you may wonder why a company might do that. And there are a number of reasons that are listed here. First one says they might use the shares to acquire control of another corporation. So sometimes if they're going to go in and try and buy out another company, they need a lot of stock because they're going to exchange the other company's stock for their stock. Also, they may try to make money on their stock just like an investor would. So they will buy it when it's low and then sell it when the price increases. Companies like to use stock for employee stock options. So this is a way they can incentivize their managers and employees to actually really try hard to bump up that stock price because they have a vested interest. Could help them avoid a takeover. You need more than 50% ownership of the stock to take over typically, or you have to be a majority stockholder. So if there's fewer shares in the marketplace available, it's harder for a company to buy up enough shares to take over. And it also helps support the stock price. So again, if there's fewer shares available in the marketplace, in theory, the price of the stock should actually go up. So a couple of basics about treasury stock. First one is it's a contra equity account. It's going to carry a debit balance. We record treasury stock at cost, so what we actually paid for that stock when we buy it back. It's going to reduce our total overall stockholders' equity, and the shares are considered issued but not outstanding. So on my balance sheet, you will see those treasury stock counted as issued but not outstanding. So if you see a difference between the issued and outstanding, the reason is going to be the treasury stock. Company's not going to pay dividends back to itself, essentially. So 62% of all companies carry treasury stock, 38% do not. So let's look at a journal entry associated with the purchase of treasury stock. It says on May 8th, Witt Inc. purchased 2,000 of its own shares of stock in the open market for $8,000. We just debit treasury stock for $8,000 and we credit cash for $8,000. That's what we actually paid for it. 2,000 shares at $4 per share. Now we have to remember that, what we actually paid for that stock. So again, we paid $4. Put that in the back of your mind somewhere. We're going to need that again. Now let's say we sell 100 of its shares for $4 per share. Well, that's what we paid for it. So in this case, we're just going to calculate the number of shares that we sold, which is 100, times the sales price of 4, that's $400. Debit cash for the amount we're going to receive. Go ahead and credit our treasury stock common when we make the sale. Let's look at what happens when we sell it for above cost. So again, remember we paid $4 per share. Now we're going to sell an additional 500 of our shares at $8 per share. And there's a nice little summary down here at the bottom of the page. So if we sell 500 shares at $8 per share, that's $4,000 that we're going to receive. But we actually paid only $4 for each of those shares of stock. So that's going to give me $2,000 that's going to go to my contributed capital or paid in capital treasury stock. It's kind of like earnings on the sale of our own stock. So we'll debit cash for the proceeds of the sale. And again, we said that was 500 shares times $8 per share. We're going to credit treasury stock at what we paid for it, which was 500 times $4 per share. And then the difference between those two will become our paid in capital treasury stock. This time, let's say we sell it and we only get $1.50 per share. So if we sell 400 shares times $1.50, that means we're going to receive $600 for that stock. We're going to go ahead and credit treasury stock at what we paid for it, which was $4 per share, or $1,600. So now the difference between what we paid for it and what we're selling it for is going to be my debit to paid in capital treasury stock. Now my debits equal my credits. We add those two together, get $1,600, and I have a credit to treasury stock of $1,600.